All right, Joe, it's all about today. If we get the taper, if rate expectations are pulled forward, we'll see what happens this afternoon, and we're going to watch rates closely, and we're looking at that tech trade because I'm wondering whether that reckoning that some have talked about happens.
I think it does happen, but I think it happens in a very bifurcated way, Scott. So large cap, mega cap technology, where the cash flow generation is in the present. It's the here and now. It's a short duration asset. That'll be okay. But more long duration assets where the questioning on when the cash flow is going to be delivered. And when I talk about those names, I'm talking about a lot of the hyper growth technology names. Those are the names that are clearly going to be challenged in an environment where we're pulling forward the rate expectations. So I think viewers of the show should be prepared for that. I'm speaking specifically towards a lot of the higher valuation names that performed incredibly well in 2020.
I know what you're talking about.
Just as an example.
Yeah, let me list some names because you're on the Chris Harvey train.
Sure.
Today from Wells Fargo, and he's been calling for a reckoning from as far back as the summer for tech. He has a new note today. We remain bullish in the very near term, he says, particularly on reopening plays and momentum. However, our trading call on tech may be at risk, especially across quote-unquote high-octane names. You guys are speaking about the same types of stocks, and when he says high-octane, I go down the list and say, okay, do we need to worry about a Snowflake, 127 times sales? The stock's had a nice run. A Salesforce, 121 times trailing, 76 times forward. We've got ownership on the desk today. Zscaler, Cloudflare, Fortinet, Workday, CrowdStrike, DocuSign. Not to be so specific to just call out those names. But, Brenda, you own Salesforce. Do we need to worry about those kinds of stocks in a rising rate environment, which could start today based on what the Fed says? Brenda, I think she's frozen. John Najarian, why don't you take that same question?
All right, Scott. I think Powell is sort of in this really tough spot today. Of course, I mean Chairman Jay Powell. If he dismisses inflation fears and inflation that is clearly out there, everything from gasoline to baguettes in France, which he doesn't have anything to do with, but I was just reading an article on that, Scott, how the prices of these things, because wheat has gone up so dramatically, that this is filtering its way into all kinds of things Americans eat and, to that extent, drink because of some of the rye products and so forth. I would say, Scott, if he dismisses that big pop in volatility, then he's going to get the bond vigilantes all jazzed up. And on the other hand, if he doesn't, if he basically does address that rather, then I think he risks being reappointed because obviously seeing the debt that we've piled on through prior administration, not just this administration,
no, I got you, Doc,
but that debt being piled on, that is going to be something that could perhaps cause the president to not reappoint.
Let's get to my question, though. Let's get to my specific question, though, Doc.
Okay.
We think the taper's happening today, right? They're going to announce it.
Yep.
If rate expectations
They'll announce it'll happen in December.
Okay. So if rate expectations, also rate hike expectations, move forward, and you do begin to have a more meaningful rise in interest rates from today forward, can you own the names that I just mentioned on my list, because you own Salesforce calls and CrowdStrike calls, and there's a lot of ownership around that spectrum of the Zscalers, the Cloudflares, et cetera, et cetera. You know where I'm getting at. I want to address that specifically.
Well, and your question directly, Scott, is if we see rates rise more dramatically, I don't think that's what we're going to see. I think we'll see a very gradual rise in interest rates. I think that this taper has been basically shown to the markets for months and months. I don't think we're going to be surprised, so I don't think we're going to see a rapid jump in those rates. If we do see that, Scott, then you're right. Then I'll take pain in all of my tech trades, and I've got a lot of them beyond the ones you named. Everything from Apple, and Amazon to Facebook and Microsoft, they will all get hurt if we see that rapid jump in rates. I am not predicting that. I think it'll be a very slow rise in rates. And if that's the case, I think we're in a sweet spot right now.